Your piece was titled "The Fed is Really Running Out of Firepower." That was back in late October. And I wonder, with the vaccine news we've gotten since the time of that publication, if maybe we don't have to find out if that's really true.
Well, the good news is we now see a light at the end of the tunnel. So we know that the pandemic can be bad through winter, and we know that's going to cause damage to the economy. But once the vaccines get disseminated, people get inoculated, which is probably going to take 6 to 9 months. You can see coming out the other side, and that's what the stock market's reacting to. That this is not forever. This is for another 6 to 9 months, and people can look through the bad news to see the good news on the other side. That said, it doesn't change the fact that the Fed really doesn't have much firepower to protect the economy over the near term, and I think the economy is going to suffer as we go from fall into winter, both because the fiscal stimulus that we had last summer is wearing off. There's going to be more social distancing. There's going to be more shutdowns. So, we have a difficult period to go through, but at least there's hope we can see the light on the other side.
I'm still seeing various pieces written about, say, the strength in household balance sheets, their ability to pay back debt, the savings rate abnormally high, basically a cushion that I guess theoretically, in some people's view, could get you into next spring. You could argue the same thing about cash levels at major corporates. I mean, back in the spring, we didn't know how long this bridge had to be. But are you more confident, at least if we have these guidelines from vaccine makers, that in fact we might know how long the bridge has to be constructed?
We have to be a little bit careful about looking at the aggregate savings numbers, because that may be high-income people not going on vacations, not doing things that they normally do, and so their savings is artificially elevated. There's also been a lot of forbearance in terms of rents and mortgage payments, and so that also could artificially make people's balance sheet look a little bit better than what it really is in practice. So I think it is good to know that the fiscal stimulus was so large in the summer that it provided a little bit of a cushion to in the fall. But I think that the farther we get away from that fiscal cliff in July, the more risk we have for the economy in the near term.
So, Bill, do you think, though, that this vaccine news at least focuses the case for stimulus? I mean, it seems that we're looking for about a year's worth until at least we're in entirely different territory. Might that allow the parties negotiating on this to be a little bit more specific about what's needed and what's not?
Well, I think it provides a stronger argument for the fiscal stimulus because it's not open-ended now. You only need it for a given point of time, and you can see how this gets resolved. In other words, you're not blowing up the federal debt by $5-10 trillion. You're talking about a package of maybe $1 to $2 trillion to get you through the next 6 to 9 months. So I think it makes the case for fiscal stimulus even more compelling because you basically want to prevent scarring to the economy in terms of people's balance sheets, in terms of small businesses being forced to close. And a little fiscal stimulus can go a long way in reducing the scarring of the economy so that you can actually have a stronger recovery on the other side.
Right, Bill. Certainly, it could provide a stronger argument for fiscal stimulus, but sometimes we see that that doesn't always follow. What are you actually expecting? What do you think is going to get through in terms of a fiscal stimulus? Do you think it's going to be enough to prevent what you just called the scarring, long-term scarring of the economy?
Well, I do think it really depends on both magnitude and scope. I mean, one of the big arguments that's going on between the Democrats and Republicans about aid for state and local governments, and I think aid for state and local governments has to be part of the fiscal package because otherwise these states and municipalities are going to be forced to cut spending to balance their budgets. And that means layoffs of teachers and firemen and policemen. That doesn't seem like a sensible thing if you want to generate a sustainable economic recovery.
And, Bill, it's kind of hard to talk about things like balanced budgets during a time like this. We seem to be in a political situation now where everybody likes to spend like crazy when they're in power. But when they're not, they want to talk about deficits. So do you think there is perhaps a more productive way about beginning to talk about how we pay for all of this on the other side of this pandemic? I mean, revenue's got to come from somewhere, right?
Well, I think that you're absolutely right. I mean, you don't want to just engage in more and more fiscal stimulus over time because eventually you will exhaust the capacity of the U.S. government to take on more debt. But in a period of very weak economy, in a period of recession, that's precisely the time you want to use fiscal stimulus. So I think there does need to be a conversation about why now, and then what do you do about it later in terms of getting the federal debt on a more sustainable path.
Shepard Smith here. Thanks for watching CNBC on YouTube.